Hello, everybody. Welcome back to another episode of The Market Close. It is Wednesday, January 15th. And folks, this is the greenest day that we have seen in 2025. I don't even know really how to start this because it's one of those days where it's like, we're here. It's happening. We're in the moment. I know we saw some of these days in 2024. And hopefully we are able to continue this momentum in 2025. But it's one of those days where everything is green, starting off with Bitcoin. We hit 100,000, actually 100.7 just 30 minutes ago. Now we're breaking just below 100,000 at 99,884. But this was the thing we needed to really cap off this day. It's like it was green, it was nice. And what would make it really green, like one of those days that you're probably going to remember for a while, at least in 2025, is Bitcoin getting to that $100,000 level. So that was pretty incredible. We got Bitcoin right here at 100,000. We have a lot of geopolitical headlines that happened ever since the market opened. The last thing I talked about on the market open, which probably was another catalyst for the market outside of CPI data, which if you didn't catch the CPI data today, 2.9% in line with expectations and lower on the core CPI yearly and monthly, which was something the markets really liked. The 10-year went down, the dollar went down. They're ticking back up a little bit, but nonetheless, they are down from where they were 2 days ago. We also got a ceasefire agreement with Israel and Hamas. That was a big deal, not only for humanity, but obviously for markets in terms of them being able to price in less geopolitical uncertainties. And from the Wall Street Journal, they write, the deal will be implemented in phases, beginning with an exchange of some of the hostages held in Gaza for Palestinian prisoners in Israeli jails, and moving on to talks over a broader end to fighting. So it's the first phase of the deal that officially got done. Wall Street Journal cited that Trump's head negotiator, Steve Witkoff, which we saw on that press conference a couple days ago, brokered the deal over the past month after working with U.S., Israel, and Arab officials. So this happened at 12 p.m. Very big deal, obviously, for humanity, but it was another catalyst off of a good CPI that the market liked because it was just less geopolitical instability. The S&P 500, we got 13 minutes into the market closes, up 1.92%, a 2% day on the S&P is a big deal. You don't get those too often. 2% right now on the S&P 500. Robinhood hit a high of 46.22. It looks like we're going to close above $45, which is incredible, up 8.79% today. I am wearing a hoodie today, up almost 10%. Absolutely incredible for Robinhood. Palantir up 3.84%, 68.44, trying to get to that 69 level. Again, Bitcoin 99.6, Amazon up 2.4%, Apple up 2%, Goldman Sachs up 6%, SoFi up 6.5%, actually rallying into the close. SoFi was at 15.05, now it's at 15.45. And then Tessie at $428. Tesla is up 8% on the day. Congratulations to all Tesla shareholders. I can now congratulate myself. I'm part of the fan club here. But 428, absolutely incredible, up 8% right here. Nubank up 5% as the dollar is going down. Rocket Lab up 3%. Snapchat up 5%. We still don't have a TikTok decision yet by the Supreme Court. Hopefully later this week. But we didn't get the decision actually this morning. Enphase is up a little bit. AMD is up 3.4%. The Dow Jones is having one of its best days in a couple months. 432 up 1.8%. Micron's up 6%. Wells Fargo is up 7%. Joby's up 3%. Nvidia is up 3%. MicroStrategy's up 5%. Grab is up 2%. The Qs are up 2.36%. Morgan Stanley 5%. JP Morgan 2%. BlackRock 5%. It's one of those days. We don't get these days often. And, if tomorrow and Friday we give back some of the gains, I don't think anyone can complain because we all know that these gains aren't as sustainable every single day in a row. But we did have 2 weeks of a decent amount of volatility. So it's really nice to see this momentum to the upside. All of these stocks hit 52-week highs today. Robinhood, American Express, Citi, American Airlines, Cisco, Barclays, Dutch Bros, Deutsche Bank, Energy Transfer. I mean, you got a lot of these names. Roblox, Planet Fitness, Kinder Morgan. Every sector, energy infrastructure, the airlines, financials, SaaS names, semiconductors, everything. This is an everything rally. Crypto, obviously, all of these names really getting some momentum, as Jeremy says, right before earnings seasons, which with tech names will officially start in just a couple of weeks. So it's amazing. Now, TSM is not today. Some people are thinking TSM earnings is today. They're wrong. TSM is tomorrow. So I wish TSM was today. It's not going to be today. Tomorrow, I believe, before the bell, we will have TSM earnings. So for those waiting on that one, that is not going to be happening today. TSM right there up 2.4%, but we will get those earnings pretty soon tomorrow. The quantum names as well, doing great. Again, we talked about that. Jensen is having a quantum day on March 20th, 2025 for NVIDIA's AI conference. Take a look at this. D-Wave's up 23%, IONQ 34%, Rigetti 22%, quantum computing 53% in a day. Now, is all that justified given these stocks are trading at like a 3,000 times price to sales? No, but you're probably not buying it for the price of sales. You're buying it because you just want to be ahead of the trend. If the trend is not 20 years away, if it's 2 months away, as per NVIDIA's latest conference and Microsoft's release of a quantum blog yesterday, then that's why traders are stepping in. And Jim Cramer did say to sell the quantum names yesterday. So, I mean, that's another reason why quantum's doing great. But quantum's having a strong day. All the spec assets as well. Outside of color, Oakler's up 7%, GameStop's up 0.16%, SoundHound up 8%, Archer up 7%. I mean, it's just an incredible day for equity markets, and it's an incredible day to be an investor. And it's one of those days that reminds you why you invest in the first place. Bitcoin right here at 99,000.5, which is just below that 100,000 level as well. Let's hear what Tom Lee has to say. Let's hear what Tom Lee has to say about this market.
Stock ideas for this month is Fundstrat Global Advisors Tom Lee, a CNBC contributor. Welcome back.
Great to see you, Scott.
All right. First, your view right now on this market is what?
I think that markets are showing some relief that CPI was dovish. And actually, I think some of the inflation prints the last 2 days have been dovish, including PPI. So it's setting the stage for yields which kind of were close to touching 5% to kind of cool. And at a time when sentiment's been negative, I think we should be rallying.
Is the Fed back in the game? Which means this report was good enough, these two reports, really, as some are saying that, okay, you're not going to get a cut in January, but you could get one in March. And some people had written cuts off for many, many months.
Yes. Into this CPI print, the whisper number for core CPI was over 0.3. So the market was bracing for a really hot number. And you could see it in the Fed fund futures where, as of yesterday, there was a 30% plus chance of a Fed hike. I think those sort of extreme views have been quelled. And I just think generally, without counting for the fact that the California fires could mess with inflation, the inflation print over the next 3 months is going to be a lot lower than what we saw November and October. And remember, January to March of last year, it was close to 0.4. So I think inflation is setting up for some good comps.
Okay. How optimistic are you for the type of return we could do this year after back-to-back, 20+% gains for the S&P?
We've gotten some good harbingers so far because the first 5 days of this year, the S&P is positive. So I'd say there's an 80% chance of something over double digits for the year. And what's going to matter to a lot of people is how we do for the month of January. But as of January 15th, we're up 0.7%. So those are good harbingers for the year.
Can we have a good year if the Fed doesn't cut until later in the year and bond yields remain elevated for a while?
If bond yields get stuck here, it is a severe tightening of financial conditions. And I think it's going to hit housing, and we're already seeing it now. So I think it is important for yields to move directionally lower.
That's a long way of saying stocks will not be good if bond yields stay where they are now.
Yes, it's going to test the market's resolve. I don't think it kills equities, but it's hard for someone to be pounding the table if they think yields are going to be stuck at close to 5% for the next 6 months.
Wow. So if yields, let's just say they stay near where they are now, you wouldn't be as optimistic as you are?
I think it's going to raise concerns. There's a policy error from the Fed. That either financial conditions are too tight, or the bears will argue the Fed made a mistake cutting too aggressively last year.
Isn't this the base case? I mean, you have what is arguably a more inflationary environment because of some of the policies that are being talked about by a new administration. Sure, they may stimulate more economic growth, but with that potentially comes more sticky inflation too.
Well, there isn't necessarily a connection between growing faster and more inflation. There is some inflation that can be generated by tariffs, and that's the uncertainty.
Well, that's what I mean also. It's like tariffs, it's inflating the deficit. It's just reinflation. It's the reinflation trade. based on some of the expected policies that may cause that.
True, but to keep in mind, last year's inflation, first of all, a lot of last year's inflation was what they call imputed because it was just statistically catching up to the price changes of the years before, but it's housing and auto insurance were 80% of the inflation over the last 4 years. And the third is labor markets, which we know aren't in an inflationary position. So in order for new policies to generate inflation, they have to be powerful forces that fiscal spending hasn't generated the last 3 years. So I'd say that it's difficult for me to make the case inflation's getting strong.
Okay, so let's talk stocks, specific names. Your top 5 stock ideas for January of 2025. NVIDIA is at the top of the list. Stock is not traded well. Why is it going to have a great January all of a sudden?
Well, NVIDIA is been mean reverting because it did have a huge move and now it's cooling. And I think it's earnings season is going to just affirm, I think, visibility about how much companies are repositioning around the value creation around AI. So to me, NVIDIA is the name you want to own for the next 3-5 years. And the fact that it's at 130, I think is actually an attractive pullback.
Okay, you like Meta, you like Amazon, you like Alphabet. We don't even need to discuss. I think everybody probably knows the reasons why. However, JP Morgan is on that list as the only of the banks. Now, obviously, it's having a great day today on the back of earnings. Why'd you single out JP Morgan? You could have picked others too. Why didn't you?
JP Morgan is one of the best executing banks. To me, banks should be re-rating higher. I mean, they survived a gauntlet of stress tests over the last 4 years, and they're producing strong earnings in the midst of a yield curve that was inverted for a while and now uninverting. And the company spends a huge amount of money on technology. So I actually think JP Morgan should see its multiple expand.
Do you like the banks in general? I mean, do you see what's happening today? It's not just JP Morgan. I mean, Goldman Sachs up like 7%. Wells Fargo, Citi up at least 7%.
I think the big story arc is banks haven't really caught up since the GFC. So to me, there's a multi-year period where banks are going to do very well. And this is a risk-on environment with animal spirits coming back and capital markets picking up. So it should be good for all banks.
Stocks to avoid: Intel, Airbnb, Alibaba, Verizon, and Nike.
Intel, Airbnb, Alibaba, Verizon, Nike. Those 5 names Tom Lee does not like.
So Nike's just not going to be able to get out of its own way still, or what?
Well, these are 1-month views. And so, yes, I think it's in the absence of a fundamental catalyst. I think many of these have been already companies with not clear visibility and weakening fundamentals and poor price momentum. So I don't think they're stocks I want to be trying to pick up.
All right. Good to catch up with you, Tom. Appreciate your time today, as always. Tom Lee, Fund
Great seeing
Strat.
you, Scott.
All right. So Tom Lee, to give him credit, again on Monday, he said he thinks the bottom is around 5,700 on the S&P. We bottomed at 57.5, at least for the week. And we're seeing this momentum leading to the end of the day. We got about 2 minutes left, folks. It's been a really strong day. I'm struggling to find the red. You got Cheesecake, that's a little red. Nike's a little red. Boeing's a little red. Applied Digital, a little red. Howard Hughes, a little red. J&J, Pfizer, Kohler. I mean, you've got probably a handful of names that are red, but every sector you look at, especially big tech, even small caps, you've got some green. Robinhood, an outperformer today, up 9%. Bitcoin, obviously 99.5. That's incredible. Apple up 2% after a rough couple days. Goldman Sachs, an outperformer as well. A monster 40% beat on EPS. Like, that doesn't happen, but that's happening. And Tesla and SoFi. Tesla, SoFi, Goldman Sachs, and Hood really outperformers today. Tesla up 8%, SoFi up 7%. Tesla's going to close looking like above 425. Hood's going to hopefully close above 1550. That would be super bullish. We got about 40 seconds left. But just an incredible day. Just an incredible day. Palantir as well, 68.14, up 3.3%. It's one of those days. It's one of those days where you're happy you're invested in the markets. You're happy you bought some dips. You're happy you potentially sold some puts because these are good days to potentially close those puts. And it's a day where covered calls are under pressure, which is okay because it means the underlyings are doing not too bad at all. All right, folks, here we go. We got some more headlines to cover as we get into the market close. It is Wednesday, January 15th, 4 p.m. The stock market is now closed. There we go. Robinhood ends the day 45.56, up 9% on the day. Absolutely incredible momentum from Robinhood. We were at $37.99 on January 13th. 2 days later, $45.56, hit a high of $46.22 on the day. Meta didn't get any TikTok news, but Meta was acting like it got some TikTok news, up 3.85%, 617 on Meta. Palantir, 68.14. That was up 3.3% today. By the way, and we can watch this towards the end of the show if you guys want to watch it. Shyam Sankar was on Ben Shapiro today for like 20 minutes. So at the end of the show, if you guys want to watch those 20 minutes, he was on the Daily Wire. I found out randomly on Twitter today. So Shyam Sankar was on a pretty big show today. Bitcoin 99,654, Amazon 223, Apple 237, Goldman Sachs 605, SoFi. It got the 1550 close. Incredible on SoFi. 1551, up 6.97%. SoFi's earnings in 2 weeks. We know they passed 10 million members, and they got upgraded today they got upgraded yesterday by Citibank. We also have an update on SoFi. Let me share that real quick, of another firm that came out and said they think the fair value for SoFi is $26 with a 12-month case of $35. William Blair. Let's look at this real quick. William Blair came out today, and they said, we are bullish on SoFi shares, which currently trade at 11.9x estimated 2026 EBITDA, a greater than 25% premium to a subset of comparables in Exhibit 55. Our base case is that SoFi will deliver meaningful multiple expansion, perhaps driving its current roughly 23 times estimated trailing EBITDA multiple forward on 2026 projections. At 23 times estimated 2026 EBITDA, SoFi would trade at 26, offering nearly 90% upside. In a more bullish view, we cite $35 as our 12-month stock price. So SoFi doesn't really get analysts that come out and throw 90% price target upside potentials, and they got one today, which is very nice for SoFi. Tesla ends the day at $428, up 8% on the day. Tesla adding $25 billion of market cap to SoFi. Or not to SoFi, to Tesla. Eventually SoFi will be worth $25 billion. But Tesla right here, 428. It's going up again a little bit after hours, 428.6, $1.37 trillion market cap on Tesla. I mean, pretty incredible. Tesla was 380 on Monday. It was 395 last night. I bought at 391. Now we're at 428. I still expect volatility, but so far, if CPI is coming down and Elon Musk is rumored to have an office space set aside for him in the freaking White House, you can't deny that feels kind of bullish. Rocket Lab right here up 3% to end the day. Nubank up 5%. Snapchat was up about 4.5%. Google was up 3%. Google doesn't move 3% in a day, so that's not too bad. 196 was the high of the day for Google. Micron up 6% on the day. Wells Fargo 75.91. That was up 6.3%. Joby was up 3%. MicroStrategy was up 5.39%. Coinbase was up 274, up 7.66%. CleanSpark 1120, that was up 8.2%. Marathon, which has gotten beat up the past couple of days, that was up 5%, 1815. And then you got IWM small caps up 2%, 224. Not bad at all. Pretty incredible. Pretty incredible. I do have a SoFi position via options, which let me take a look at because I haven't actually checked those today. I have some spreads on SoFi aiming for a $20 price. Yeah, we were up 9% on those today. It's kind of a challenge we're doing with the channel. 3,500 to 50, 3,000 to 50,000 is kind of the potential here. So a 14x if we can get SoFi to $20 by January 2026, which again, if they keep executing and they're guiding for a full year of profitability, it does look like that is very possible in a year where financials, we can see it from the bank earnings. I mean, we're not even in 2025 yet in terms of bank earnings because that was Q4's earnings. But if the banks were able to do that good in Q4, I can only imagine what they're able to do when M&A and IPOs do come back over the next 4 years. So it does seem like financials are not in a bad situation. Bitcoin 99.7, Palantir 68.14, Goldman Sachs 605, that's up 6%. And then Tesla up 8% of the day, 428.22. Not bad. Not bad at all. All right, so let me ask the question. NVIDIA up 3%. I didn't even take a big look at NVIDIA today, but nice rebound. NVIDIA went red early in the day at like 9:35, and then it rebounded pretty quickly. So NVIDIA right here at up 3.3% at 136. Here's the question. Did you take profits today? Did you take profits on anything? It could be $1 of profits, $100 of profits, $100,000 of profits. Did you use this day as a reason to say, you know what, it's a green day, but I'll let someone else hold this stock. I'm out. And essentially, did you kind of think it was a little bit of a bull trap today? A little bit of a bull trap. So this is what I posted on Twitter today. And you know, I know we've been having this discussion, but I think it's important to continue having it to just make sure we're level headed here. The reasons against the bull trap are pretty simple to me. CPI and PPI was good. Bank earnings, amazing. 10-year showing relief along with the dollar coming down. Big tech earnings are around the corner and they should be strong. And then Trump admin is freeing up energy and crypto regulations as soon as they get into office. Reasons for the bull trap. Inflation sticky, and this is only 1 month of good data. Earnings might not be strong enough, which we'll find out in the next month. Too many unknowns with the Trump administration, which is just true. There's going to be unknowns. And then tariffs could backfire. Those are my arguments against the bull trap versus for the bull trap. Obviously, I'm leaning against the bull trap simply because I think earnings is what drives this market. And if earnings are going to be good, as we're seeing with the banks today, it's going to be a little bit tougher to see the broader market take hit. Spencer, thank you for the $5 super chat. Reparations for being a bully. A lot of you guys, it's good I have a thick skin, bro, because a lot of you guys bully me. I posted this on X because, like, why not? I said for some reason I felt like wearing a hoodie today. And I posted this selfie, you know, it's your average selfie. And the amount of comments underneath, you guys are great. You guys are really good. Don't pay attention to those bricks in the background. I didn't see that before I posted. Just don't pay attention to that. They're real bricks. You know, your eyes can deceive you sometime. Pay attention to the guy there, not the bricks peeling over a little bit. But nonetheless, thank you, Spencer. Appreciate that. It is pretty exciting for the momentum that we're seeing in the market and obviously for Robinhood as well. Okay, let's see if you guys took profits on the poll. We have 80% said no. 80% said no. So most of you guys held on and did not take profits. Just me bought AMD. AMD had a great day, dude. 119.96. Not bad for AMD. Craxy brought some grab. I did buy some more grab options today as well. Again, I just think we are close to a bottom if the dollar comes down on grab. This whole decline from 570 to 440 makes no sense on the fundamentals. And if it did, I think I've talked to enough people to understand the financials of this business. Either you assume they're not going to grow and it deserves to get hit, which that's the risk I'm taking. I think they will show great growth. Or you think this is macro stuff. And if it's macro stuff, then that's stuff that's willing to be bought, in my opinion, because those are opportunities that inevitably go in your favor as the macro gets better, if you believe the macro gets better. Let's take a look at the dollar right now. The dollar is at 109, so it didn't end the day below 109, 109.07, but that is below 109.90 in the morning, which is good. And then the 10-year, we were at 4.8 at 5:30. We ended the day at 4.653, which is a pretty substantial decline in my opinion. I mean, the bond market finally started saying, let's lock in some yields and let's buy these up before this thing gets any lower. What's your grab target at $10 in 2 years? So I feel it, which is also very conservative. I think after 8 quarters of profitability, EBITDA growth, free cash flow growth, $10 is not the craziest price target, along with the fact that they have $6 billion in cash, which should probably get to $8 to $10 billion in 2 years. Breaking news from the Wall Street Journal, just got this. The Dow just had its best day since the post-election rally on November 6th. Wow. The Dow had its best day since November 6th. That's how crazy today is. I mean, I know today's green, but the last time I felt this green was November 6th. And I think a lot of you would agree. The last time it was this green was after Trump got elected. It's been a long time since it was this green. HIMS as well. Let's take a look at them. I think they were up 5% today. HIMS was up 6.3%. Wow, HIMS is up there as an outperformer today. HIMS got a decent amount of momentum. Yeah, Tesla 440, 450 calls are on fire. I agree. Anyone has those those 400 calls for January 2026, or a lot of people got the 350 calls when Tesla was at 200. I know that was a popular one for June 2026. Those are doing great as well. Lisa up 17,000 today. We're still greening after the market. Correct. We are still having some green after the market. Marathon's up a little bit. Clean Spark's up a little bit. TSM. You know what the funny thing is today? In the morning, we were like, all right, we're green. Let's enjoy the green at 9:30 and let's get ready for it to go down. And I think pretty much everyone knew, like, all right, let's see if it actually lasts. And boy, did it last. I mean, boy, did it last. Like for Hood to actually end the day up 9% and not give back some of those gains, which maybe it gives it back tomorrow or Friday when people take profits, yada, yada. But the fact that he was able to get to those levels, hold those levels, and then get new buyers to come in at those levels, exceptional. Absolutely exceptional from what we're seeing today. In terms of the Israel and Hamas news, so a little bit of controversy around that today. First of all, who gets the credit for that, right? That has been a little bit of the headline. And if you ask Biden, well, let me just show you guys what his response is when he was asked who should actually get the credit for brokering a ceasefire.
Who does the history books credit for this, Mr. President, you or Trump?
Is that a joke? Oh, thank you. Thanks, sir.
Is that a joke? Was his response for who should get the credit. Now, Trump, this is what he wrote on Truth Social. The epic ceasefire agreement could have only happened as a result of our historic victory in November as a signal to the entire world that my administration would seek peace and negotiate deals to ensure the safety of all Americans and our allies. I'm thrilled American and Israeli hostages will be returning home to be reunited with their families and loved ones. With this deal in place, my national security team, through the special efforts of Steve Witkoff, will continue to work closely with Israel and our allies to make sure Gaza never again becomes a terrorist safe haven. We will continue promoting peace through strength throughout the region as we build upon the momentum of the ceasefire to further expand the historic Abraham Accords. This is only the beginning of great things to come for America and indeed the world. And then Trump goes on to say that we have achieved so much without even being in the White House. Just imagine all the wonderful things that will happen when I return to the White House. So, I mean, look, from the sources I've read, right, to like just be pretty objective about it, all the sources I'm reading, Reuters, Wall Street Journal, whatever source you want to call it, I've read a bunch of them today, they are citing Trump's head negotiator, not Anthony Blinken, the Secretary of State, which is under the Biden administration. They are citing the Trump guy, Steve Witkoff, as the dude who was literally in meetings for the past month, and the Arabs stopped responding to him for the past couple of days, so they didn't even think they would get this deal done. But then finally yesterday they came back to the table and they got the deal done, which is not a full end to the war, but it's at least a ceasefire to begin the beginning of hopefully an end to this war. All those sources are citing Trump's guy, and from that perspective, it is kind of weird to see how the Biden administration is thinking of it. But then again, you know, this is politics, and I would imagine they would want to take credit for it. But that is another thing, regardless of who takes credit for it. That is a beautiful thing for humanity. And obviously, the markets did like that we're getting some more certainty. And now if the Russia-Ukraine situation can come to an end, obviously that would be really good for markets and humanity as well. Bitcoin right there, 99.7. Palantir 68.14, up about 3%. Apple 237. Goldman Sachs 605. SoFi going up again after hours a little bit more, 15.53, up another 0.13%. There you go. There you go. Pretty incredible day for the markets. Mithra says, Amit, I will listen later. I've had calls in the red for so long and I'm green for the first day. I'm going to smoke a joint or two. See you in the morning. I love it. I love it. Thank you for thank you for being here, and hopefully you enjoy listening later while you are high, because you're not the only thing that went high today. We also had this market go pretty high. Get it? High. Okay, anyway, let's move on and see what other headlines we've got going on in this market. So we have a couple other things that we have to discuss in terms of what we're thinking in the context of inflation, and also what we're thinking in the context of the Beige Book. So the Beige Book, which is just a bunch of deals that come out, or not a bunch of deals, but a bunch of statements that come out from the Fed. We had some statements from them that I want to pull up for a second. And we also had John Williams talking today, and I have a summary of what he said. So let me pull this up real quick, and then we'll look at what John Williams said later today.
Got some breaking news as well on the economy. Steve Leishman, about 17 minutes later than we'd planned, but still news right now on the Beige Book.
You got to stack it. It's a linear medium, as you know, television that is. Well, the Beige Book is very interesting because it is replete with mentions of the incoming policies or potential policies of the incoming administration. Here's the headline that we look at every month. Economic activity increased slightly to moderately. Consumer spending moved up moderately, but most districts reported strong holiday sales that exceeded expectations. That's what our CNBC data show as well. High cost of materials and financing, however, weighed on construction. Manufacturers were stockpiling inventories, according to contacts of the 12 Federal Reserve districts, in anticipation of higher tariffs. High mortgage rates held back residential real estate. There were More contacts are optimistic, however, for 2025 than contacts were pessimistic. Contacts were concerned about changes in immigration and tariffs could negatively affect the economy in 2025. Employment ticked up on balance. 6 districts reported slight increases. 6 said there was no change. There was difficulty.
So the beige book was okay. The beige book was okay. The Fed didn't get too hawkish here. We also have Barkin remarks. So here's what Barkin said. The Fed should remain restrictive to bring inflation back to 2%. Demand in the economy is solid with no signs of overheating. The latest CPI data confirms that inflation continues to decline. I can see paths where inflation is sticky or continues to progress toward the target. I am not concerned with an overheating economy right now. Demand is solid, but not booming. Inflation is coming down towards the 2% target. So unlike Michelle Bauman, who I think on Friday last week, or it might have been Monday this week, was super just hawkish, like weirdly hawkish, just like we're never cutting again type of hawkish. Barkin and John Williams today had a little bit of a different perspective coming out from the beige book, which is what you want to see when you get a CPI that is much better than expected. Can you guys believe that on Friday last week, Bank of America said we are not getting a real rate cut for the rest of the year? It's like, what? And this is the problem sometimes with like a lot of these Wall Street firms. They are so reactive, so incredibly reactive to some of the stuff that's going on. And it's like, well, wait a second. A week later, CPI data looks like we probably should be getting a cut. Labor market data is not as significant in the context of inflation coming down, because the whole point of getting a rate cut is CPI coming down without the labor market needing to collapse in order for inflation to come down, aka inducing a recession. And so I would imagine the Bank of America macro analysts, there's no way in hell they're still singing the same tune they were singing on Friday, which was this idea that we're not getting a rate cut for the rest of 2024. Like, there's no way. And we're seeing it in the Fed futures probabilities that are now pricing in at least 2 cuts for the end of the year. So granted, if this CPI data is an anomaly and we actually do get pretty crappy data coming into the next couple months, which is possible, then maybe that's the case. But look, Dan Niles said his number one position this year was cash. And up until today, it looked like he wasn't horribly wrong. If inflation is coming down and this data today that we got is going to be consistent, especially with big tech earnings, maybe the best place to be in is not cash. Maybe it's not going to be cash. And so I think we're really going to have to see how this plays out over the next couple months. Let's hear from Cameron Dawson, get her thoughts as well. And then we'll get into some other headlines we have across the market.
To our talk of the tape. Can stocks get back on track, and can this rally now resume? Let's ask our panel. Cameron Dawson, Chief Investment Officer for New Edge Wealth. Adam Parker, the founder and CEO of Trivariate Research, a CNBC contributor. Both are here at Post 9. It's nice to see you both.
Great to be here.
Cameron, to you first. Are we all right now? I mean, we were worried. These rates have been backing up a lot, and we're worried about inflation moving higher and rates moving higher. And we did get that relief today, and the market loves it.
Yeah, we did think that rates moved a little bit too far too fast. Look at the 2-year. It traded up to 4.4%, which is just slightly below where the current Fed funds rate is at 4.5%, which effectively said the bond market was starting to price in the risk of further hikes. And so you get this slightly softer than expected inflation data, which allows you to have this big relief rally, mostly in the interest rate sensitive parts of the market, which you're seeing the Russell 2000 outperform so much on that. Doesn't mean that we're necessarily out of the woods for things like small caps in the volatility that they've been experiencing, but the sigh of relief is welcome.
Can we take a chill now on this whole, the Fed is not going to do anything? Oh my gosh, they may actually hike before it's all said and done because of what the prints were today. That Goldman Sachs Asset Management today, while today's release is likely insufficient to put a January cut back on the table, it strengthens the case that the Fed's cutting cycle has not yet run its course. I feel like we had gotten to the point where we were like, oh my God, they might not do anything anymore.
Yeah, I guess
we had not gotten to that point. Some of the mainstream analysts and Bank of America got to that point, but I think most logical people, even like Chris, who's been on the show for the past 5 episodes, has said this idea that we're not getting a cut is kind of insane.
with some perspective, I'd say I don't know if it matters. Meaning, at some point, if you think the Fed's half done, 2/3, 3/4 done, you just can't argue you have as much of the accommodation in front of you as behind you. So I don't think we're as bullish as we were a year or two ago. We could say, wow, we just started the cycle. The Fed's going to be there. The multiple. What got a little weird to me was the market was going up late last year, even when people were still hawkish. So today makes sense. You get dovish, the market goes up a little bit. But I don't know if we're going to get only dovish data points for the next 6 months. If we do, it means the economy is disappointing. So I would say there's pillars to the bull case. They look less interesting to me than and less, lower probability than they did 6 months ago. But, at least for now, people aren't going to think they're going to hike in the first half of this
But
year.
what if we're getting so-called hawkish data points for the right reason? What happens if growth remains strong, and then if inflation remains where it is, or even ticks maybe down,
The stock market goes up.
Good,
Answer
right?
that question: the stock market goes up. Yeah.
Dude, the market is so green. CNBC's like banner below is green. Like usually that thing is black or it's like blue. They literally the banner is green. That's how green today was.
I think,
Why isn't that the base case?
I look at the world right now and I say, what made me super excited about equities 2 years ago and a year ago? I had early phase of the Fed, no longer true. I had massive U.S. Deficit, which really was a fiscal stimulus. Now I got these guys coming in. They're going to look to reduce that and maybe be more efficient with that. I had a dream of a China stimulus. That looks less interesting. I had some bull things now that I didn't have before. Massive potential M&A cycle, less regulation. I get that. And maybe some earnings proof cases on AI.
You don't think you're going to have fiscal stimulus through re-upping tax cuts, if not even giving more tax cuts?
Well, I think it takes less hikes off the table more than it takes lower rate, taxes from here. So I think that's bullish skew. But I'm just saying, if we're looking at all the things that make you bullish, margins are up a lot. I think I need revenue acceleration now. And I think what got in the price after the red sweep a little bit was more revenue acceleration than we're likely to see. So
And we're going to see that. We're going to see that on tech earnings that are going to be starting, well, tomorrow with TSM and then going further for big tech in about 2 weeks. Now, again, financials, really good week for really good earnings for financials. And we talked about that in the morning. But I think, again, that does matter a lot for how the market is conceptualizing what a Trump administration would do to financials. And that's another reason the market's like, okay, so if the banks crushed it and inflation's coming down and Trump's getting in office, it's really, really hard for us to be like, okay, we're not going to go long some of these sectors that are obviously going to benefit. I still think the question of the year, and I think we've been talking about this since late December, the question of 2025 is going to be, do the winners keep winning or do the winners get rotations? And it's just, my thought is the winners keep winning, but at some level, I wonder if people think it's time to rotate. And I think we need egregious valuations on the winners, aka the Max 7, for that rotation to make sense. Bitcoin 99.8, but we don't have egregious valuations. Maybe on Apple, because in general, I think their growth is not justifying as much of a multiple that they're getting. But on the other ones, none of these are really egregious to me. And the only other one people will cite is Tesla with a 210 PE. But for Tesla, you're buying so much potential, right? And that potential and that narrative and the Elon-Trump relationship, that is sort of a fundamental argument for Tesla. Amazon, Nvidia, Google, Meta, these things are not expensive, or at least they're not egregiously expensive to the point where rotating out of these, could be the best deal, especially given the buybacks and the innovation and the R&D and yada, yada, and the potential acquisition. Like, none of these companies are really acquired companies in the past, call it 5 years, because of the Biden administration. If they can start growing externally by actually acquiring and like getting new avenues of growth, who knows what that could do for their bottom line over the next 4 years. So it's going to be exciting. It's going to be very, very exciting to see how this plays out. Now, here's another question. Do you think we give this back tomorrow? Do you think we give these gains back tomorrow? Because I would not be surprised tomorrow if we're red. Now, granted, if we give back some of the gains and not all of them, that's the bullish part of just like being long, right? You have a good day, you give a little bit back, but you're at a higher pace. You can move forward, eventually make the next leg up. But if Robinhood falls 9% tomorrow, that's not going to be fun, right? If Tesla falls 8% tomorrow, like that'll suck, because then today was kind of just a blip. It just doesn't feel like a blip. It feels real. It feels a little real. Doug says, here's the biggest bear case amid on the day when literally everything is up and the CNBC banner is green. Rick is down in red. Well, Rick did run over the past couple of days, right? So Rick's taking a breather. It's only down 10 cents, but we need Rick to get green again. When Rick is green, we know that the economy is definitely doing very well. For those that don't know ticker symbol Rick, it is the holding company of, let's just say, establishments where people go to throw single dollar bills up in the air, Let's just say that. Yeah, let me do a poll. Let me do a poll on. Dude, speaking of strip clubs, how many damn we like someone made this joke in the morning, but we have tons of polls in this freaking show, dude. It's like that's what's similar between us and strip clubs. Do we give back the gains tomorrow? But I think it's good because we get a good sense of kind of how people are thinking about this stuff. And it gives us a better understanding. I hope he gives them back so I can buy back my covered calls. That's fair. Palantir covered calls were definitely under pressure today. I know people have been waiting to get out of those. Look, I mean, this is what I keep telling Steve. I think Steve has covered calls at like 45 or something. I don't know how easily, and I know he's getting a little cocky because the stock fell from 85 and it's going to keep going down. It's like, I don't know, bro. I don't think it's that easy to just be like, yep, my covered calls are safe. Now, granted, earnings, we need good growth. We really need good growth on earnings. But if we get it, then I don't know if we have to go back down. Especially if the macro is good. Especially if the macro is good. Okay, what do you guys say on the poll? No, 63%. Do we give back the gains tomorrow? We get money market inflows tomorrow or outflows. From some of the research I looked at, we've added a decent amount. Like it's preliminary research. So I think tomorrow is going to be an increase. Last week was 66 billion. And the weeks before that were 40 billion and 50 billion. So I don't think we're done with the money market inflows yet. I think people are still trying to lock in some yields. But again, when you see a day like this, you got a lot of people in money market funds saying, damn it, why am I in a money market fund? Right. And it might create a little bit of some outflows going into tomorrow once we get the report. But I still think net it'll be some inflows this week. It's just, I think we're all on edge because we did get some green last week, right? And then it just all went away towards the end of the week. So I think all of us, we're in the middle of the week now. We're trying to see, is this sustainable? But the key thing is we don't have any more data for a long time. Like the Fed talks on January 29th, the FOMC meeting, and then we get the tech earnings. But in terms of macro data, CPI, PPI, mortgage rates, initial jobless claims, all that stuff. I mean, we do get initial jobless claims tomorrow, but like the main ones that mattered going into CPI has already happened. And so we have to wait about another month for us to really get a big week of data. But all the data that the market needed to ingest, it happened as of today. And at job, non-farm payrolls, all that stuff. And so now it's a question of earnings to see where the market goes. Hindenburg research said it will be shutting down per unusual whales. What? Hindenburg's shutting down? Didn't they just short Carvana? Wow. That is weird. I think that okay, my gut reaction to this, I think they're getting investigated. My gut reaction is I think they're getting investigated. That's probably wrong. But if the SEC thinks they've been manipulating or something, that could be a reason for shutting down. Lawsuit, right? Yeah, I think my gut reaction is lawsuit. Even, and I think they'll, I mean, I don't know. That's my gut. That's what my gut says. I'm probably wrong, but that's what my gut says. The only other reason is that, I don't know, the founder doesn't feel like operating the firm anymore. Like, and he's bored. He wants to move on with his life. But they just shorted a company a week ago. Why would you short Carvana and make a big hoopla about it, and then you're shutting down the next week? So are you not short anymore? Are you gonna? Carvana is. Oh wow, Carvana was up 9%. Oh, that short failed. I think they shorted at 200. I think they shorted. When did they short? Carvana was 170. I think they might have shorted at 203. Yeah, they had to. Any of their shorts, unless it was at like 234 a month ago, their short is not going well on Carvana, at least based on today. They put out a message from the founder on X. Okay, let me get to that. Let's see. That's a big short selling firm going down. A personal note from our founder. Okay, let's read this. What is going on here? That's weird. That's weird. Shout out to Mr. Derek Wall. Thank you for the gifted 50 memberships. Appreciate you, brother. Derek had some pretty exciting news in his life today. And he's very, very blessed, and he should be very excited for his life. So thank you to Derek. Thank you for sharing the blessings. Congratulations to you on your big news. And thank you for the 50 gifted. 50 of you guys just got gifted memberships today from Derek. Okay, those memberships are going out right now. Let's see what Hindenburg's founder had to say. All right, here we go. As I've shared with family and friends and our team since late last year, I've made the decision to disband Hindenburg Research. The plan has been to wind up after we finish the pipeline of ideas we were working on, and as of the last Ponzi cases we just completed and are sharing with regulators, that day is today. Talk about being humble, huh? I write this from a place of joy. Building this has been a life's dream. I did not know at the outset if it would be possible to find a fulfilling path. This wasn't an easy option, but I was naive to the danger and felt drawn to it magnetically. This is very interesting to read. I'm not going to read the whole thing, but basically he's shutting down. He's expressing his gratitude for shutting down. Boy, did we have an impact. Eventually, more than I imagined was possible at the outset. Nearly 100 individuals have been charged civilly or criminally by regulators, at least in part through our work, including billionaires and oligarchs. We shook some empires that we felt need shaking. Okay, so Hindenburg is justifying the work they did by getting the SEC involved to investigate some people. Beyond my own desire for relief, it also feels selfish to keep the knowledge we've accumulated trapped within our small team. I have more than enough. In the past several years, we've flooded with thousands of messages from many of you asking how we do what we do or whether you can join the team. I read them all, and I've been trying to figure out how to respond in a way that can get everyone an answer. So over the next 6 months or so, I plan to work on a series of materials and videos to open source every aspect of our model and how we conduct our investigations. Look, to Hindenburg's credit, they did have some good shorts. They had some really epic shorts, and they did do a great job. There were some shorts that were not good, but there were some shorts that were pretty good. The timing of this is weird. The timing of this is very weird. Unless he's legitimately busy with or bored of short selling. Hindenburg founder, I think the guy's name is Nate or Nick, Hindenburg Research founder, Nate or Nick, one of those guys. Nate Anderson. Okay, how old is Nate Anderson? That is weird, because what is this guy going to do next? What is this guy going to do next? He's 38 years old. 38, and he's shutting down one of the most successful short-selling research firms. I don't know. Something feels a little fishy about that. Yeah, the Wall Street Journal just sent the notification. Wow, this is big news, dude. Everyone's reporting Hindenburg shuts down. That is pretty damn weird to do that this early. But there you go. Hindenburg's down. Derek, this is the exact same thing I said, Derek. Derek says, I bet they're getting sued or investigated by the SEC. At 38 years old, if you are having successful shorts and you're they shorted Adani, I mean, they called out some pretty bad companies, or at least at bad moments. Why would you shut it down? I feel like you only shut it down if the regulators are really getting on you, or you can't really prove your case, or you have some class actions. It doesn't feel natural to just shut it down like this. Dude, Wall Street hedge fund managers do it till they're 80 years old. This guy's 38 and he's shutting down shop. That's weird. Yeah, maybe he messed with the wrong person. I mean, you mess with the wrong people sometimes that are very powerful. They make some phone calls and you never know. And then you have to say, you know what? I'd rather not deal with that. I'm out. I'll get out of here. It feels weird, right? It feels weird to just leave that quick. They shorted SMCI too, right? I mean, they got that one right. Not saying SMCI is a horrible company, but at least when it was at 57, a day before the accounting errors, they called it a short. And then SMCI fell to 17 or whatever. So, I mean, that was their latest successful short, even if, SMCI is not going out of business or anything. But that's weird. That is very weird to be shutting that quickly. Yeah, death threats, dude. Yeah, dude, if you bark up the wrong alley in the world of finance and you're messing with people that are much more powerful than you, I don't think this Nate Anderson guy is a billionaire. Nate Anderson net worth. Let's see if we can find it. I don't think he got that rich off of shorting companies. Okay, one website saying 5 million. I think it's more than 5 million. But when you start messing with some big dogs and there's big money involved, you never know. You never know how this plays out. Maybe Charlie's coming after them after they crushed SMCI. Maybe, dude. It's just this is risky business to be in, bro. Short these big companies, especially if you're wrong on the short, like Square. They were dead wrong on Square. Dead wrong. Remember their thesis was rappers are talking about selling drugs via Cash App in their music. That's why it's a short, because Square is facilitating illegal activities via Cash App. And they're citing 2 Chainz lyrics Like, are you kidding me, dude? Like, that was just a disgusting short, like egregious. And so I don't know, when you do stuff like that, maybe you ruffle the wrong feathers and then messes things up. What happened today? I didn't watch the market. Is Tesla up? Tesla is indeed up. And what happened today was 3 letters, C, P, and I. I mean, that was the reasoning for today. And the good thing this morning, we talked about it. Expectations were so damn low on this market because of inflation, like so unbelievably low, that if we had any good CPI, we would get a little bit of a boost. And it was better than a good CPI. It was an incredible CPI. We had a decrease on the core, even if we had an increase on the headline. And that's kind of exactly what we needed to see for the market to get a lot more excited about these numbers. It's just, the one thing I'm thinking, though, is that it's January 15th, right? How much higher can we go from here? And I know we're still below our levels from November 6th, and when we were at 6,000 on the S&P. I get it. Either there's two routes. Either we're legit going to the 7,000 target that Oppenheimer, Ed Denny have, and we're going to start cracking through 61, 62, 63, 64 pretty quickly, or this is too much green too quick, and we need to get a serious 15% correction, which everyone's been pontificating about, but it hasn't happened. And then we can make the next leg up. It's one or the other. I don't think it's going to be this kind of flattish, like choppy thing. I think we either start making the move up to 7,000 on the S&P, or we like legit take a downturn. And we haven't done any of those yet. We've been kind of just flat for starting up the year. 1 or 2, 3% down is not really a big correction here. So I guess we're going to see, but it does feel pretty damn incredible in terms of this momentum. Oh, I got to show this call. So you guys remember that 380 call Derek bought? Here's the update on that. Nice little 200 grand in a couple days. He bought these on 113. It's 115. 200 grand in 2 days. I'm showing this as inspiration because I'm not doing these plays, but one day, this is what happens when you have some disposable money that you can work with. And if you have a little bit of degeneracy in you, like Mr. Derek Wall does. Dude, these aren't even leaps. Usually Derek doesn't do 6-month He usually gets like 2 years out. So this was a little bit more extra bullish on Tesla. But this is like this 200 grand is magnified across Wall Street. You've got people that are probably up $200 million today on Tesla call options, because when you're playing with really, really big money and hedge funds and money managers, these things move pretty aggressive. And as long as we hold on to this momentum, hopefully we get to keep it. That's your account, bro. Don't lie. Dude, I wish, bro. I wish. Maybe when Grab gets like $7, that'll look like my account, but not yet. Absolutely sophisticated gambling. What's his login? Trump considers executive order hoping to save TikTok from ban in the US. Dude, Trump really wants to keep TikTok, bro. I don't know if he's going to be able to get to keep it. I don't know. Because TikTok gets banned January 19th. Trump gets sworn in January 20th. Can you do an executive order the day you get in office to bring it back? Does it work like that? Especially when Congress passed this as law 8 months ago? I don't know. It was that easy for it to play out like that. Amit, who's winning the $1,000 challenge you have with Derek? Yo, Derek, we have to like engage in that challenge because we still haven't done anything yet. I've like forgot we even had that challenge. So, and I'm sure Derek did as well. So we got to like make a trade soon and make that a legit challenge. $1,000. By the way, you guys can participate as well. If you have $1,000, you want to, set up some random M1 Finance account or whatever. Maybe for some of you who haven't tried Robinhood, set up a Robinhood, put $1,000 in there, and we can have a challenge with everyone of who can better perform $1,000 towards the end of the year. Right now, basically my 1,000 is in cash. So I guess I'm getting 4% on that 1,000 for the year, but we got to do something better than that. All right, let's get some Hindenburg coverage. This is really big news. Did not expect this to be happening today.
Is no more. The New York-based investment firm did confirm in a letter that they will be disbanding as of today. This is according to the founder, Nate Anderson, who founded the company back in 2017. You may have heard of the company because they put out reports alleging corporate fraud as well as malfeasance. In a letter, Anderson said there was no reason to disband, no health threat, no big personal issue, but did write, quote, "Someone once told me that at a certain point, a successful career becomes a selfish act."
Come on, bro. Not at 38. Not at 38. Get out of here. 38 is a baby in the world of finance. Warren Buffett's doing it. He's in his late 90s. Like, come on, bro. That is not convincing. Not at all.
Anderson plans to open source the firm's investigative methodology and share his knowledge through materials and videos to empower others in the field. And those are the names you're seeing on your screen that they've written reports and shorts about. So a familiar name, but no more. He says that he's going to focus on finding jobs for the people that work in the office, some who will be creating their own investment firms. Back with you guys.
Okay, Christina, thank you.
Thanks.
Well,
I'm not buying it. I'm not buying it. I'm not buying it. Maybe I'm too skeptical, but I'm not buying it. I'm not buying it, dude. There's always going to be companies to short. And Hindenburg's brand, do you know how hard it is to build a brand? It is so hard to build a brand, a real brand that has respect. And whether you like Hindenburg or not, when they tweet something, everyone pays attention. Everyone. To have that level of brand in the world of finance, where there's so much grifting in finance, you know, there's certain names where you trust, certain names are like, that's BS, I'm not even looking at it. Hindenburg, even if they've got some shorts wrong, they have a quality brand. To leave that at 38 years old. What did he say? An advisor told me once you're supposed to leave on top. It's like, no, dude. Like, to assume that you've accomplished everything you want to accomplish at 38 in the world of finance is asinine. When Bill Ackman's 59 years old and still going. Like, there's no, like, I understand the argument about trying to leave on top. I get it. Like, you know, Michael Jordan retired in 1998, even though he came back because he wanted to kind of leave on, but like, still, you don't, you leave everything out on the floor. And in the world of finance, there's a lot of years to execute because you don't need to be physically gifted. It's just how smart you are and how much research you do. And those variables aren't contingent on anything else other than putting in the work. Very weird. Very, very, very weird. I guess we'll find out more details eventually, but now we're not going to get shorts from Hindenburg. Yeah, I think there's a little bit more to the story. Just a little bit more, bro. Trump can't do an executive order to override Congress. That's not how it works. I agree. I don't think Trump can save TikTok, dude. Now, there were some senators in Congress that put in a bill today, and they said we want to extend the TikTok ban from 270 days to like give it 270 more days before it officially happens. Yeah, Senator Markey, Ed Markey, from I don't want to say it, but from Massachusetts, Ed Markey, to introduce a bill to extend the deadline for TikTok ban takes to Senate floor in support of vibrant online communities. So basically the dude's like, hey, a lot of American small businesses are going to get affected by this. We should not ban it, you know, until we have a real plan, and we should extend it for 270 days. I don't think this bill is going to get passed. I don't think so. I do not think so. Many people quit while they're ahead to just enjoy their life. I'm not disagreeing with that. I'm not disagreeing with that. But let's think logically about this, okay? If you're a super ambitious person, which Nate Anderson had to be to go up against the companies he went up against to build Hindenburg, ambition doesn't die out like that. Ambition doesn't die out 10 days after you short what you think is one of the biggest frauds in the world, in the words of Hindenburg, aka Carvana. Like that's not how it works, bro. When you achieve success at the levels that Hindenburg has achieved success in the world of finance, you don't just leave while you're ahead to enjoy your life. I'm not saying people don't do that. Obviously, people have done that, you know, throughout history. But there's certain, like, I mean, when in finance have we seen that? Has Warren Buffett, you know, did Warren Buffett quit when he was ahead? Did Bill Ackman quit when he was, even Kathy, bro, Kathy in 2021 probably should have quit when she was ahead, but like, did she quit? No, she went down with the ship. And now they have so many losses that their tax offsetting strategy is going to protect gains for like the next decade. In finance, who leaves when they're on top? It's weird. Yeah, as Rodney says, there is a difference between stepping down. That's another thing. That's a great point by Rodney. He could have stepped down and someone else could have been the CEO and he could have still owned equity in Hindenburg and just been like an executive chairman. Why would you shut down the whole firm? That is the weird part to me. That is the weird part to me. I don't know. Maybe I'm wrong. Maybe the guy wants to go on a beach and just chill, but it is weird. It is very weird. We need watchbergs like Hindenburg. This is sad. Yeah, I mean, look, I don't think there's anything ideologically wrong with Hindenburg existing. I've disagreed with some of their shorts, but like them being an entity in finance is definitely healthy. You need them to be able to call out really bad frauds. But it's just weird that it's happening like this. IWM 224, Bitcoin 99.6, Amazon. We got some stocks going a little bit red after hours, but overall relatively green here on the day. Let's get a little bit more market commentary and then we'll keep going forward from there.
Oil prices continue to move. Why perhaps the rest of the markets are not totally alarmed by it, still has not broken containment. You see WTI crude is the blue line here. That was the invasion, Russia's invasion of Ukraine. That's when it really burst higher. We're basically just flat from before that invasion. And HG, of course, is copper. Put that in there for comparison of another kind of vital commodity, basic commodity that has also been kind of flatlining for a while. This does not suggest massive global demand for raw goods. So for now, this is a fairly acceptable situation. Obviously, if it does, in fact, burst higher, start making new highs, it's going to be a concern. But keep in mind, incomes are much higher over the last 3 years, the size of the economy higher as well. So take a look, though, at the stock sectors that are levered to these things. XLE, of course, is the energy sector, has really held its value.
Who's long energy? Who's been holding energy through the, I guess you could call it, little correction from November till December? Because energy was in a little bit of a bear market, especially Oxy, which is Buffett's pick. But who actually has exposure to oil and gas?
Very well, despite the fact that from this point, crude oil prices are lower. Of course, they have refining operations and more diversified. Exxon and Chevron themselves are more than a third of the XLE, and they're very stable businesses. Net income is about flat over the last 3 years. And then you have basic materials, which really has struggled. Those companies, a lot of the chemical companies, more levered to global demand and global manufacturing, which has been somewhat in the dumps, guys.
I seem to see a lot of holding patterns in a number of things as we get ready for this second Trump administration to start. Talking about the levels in the S&P, or you're talking about the chart you just showed about what crude is doing.
Yeah, and especially these things are much longer term sideways patterns. Even you could talk about the Russell 2000 too, which really has not gotten escape velocity above its late 2021 levels. So it really does show you that the S&P owes a lot to the AI boom and the mega cap tech stocks that have managed to paper over this period when global manufacturing was really in a bit of a slump. And in fact,
Oil's doing well. Oil is doing well. Again, oil prices going up is helping some of the oil and gas companies, but they are not doing too bad. XLE, also the headline from the Journal yesterday about Trump. Wow, XLE was up 1.5%. Trump unleashing a ton of executive orders on day one for energy and crypto. I mean, dude, maybe this is a little bit of a pre-Trump rally. And then once those executive orders come out, we're going to see a little bit more momentum for those sectors, particularly energy and crypto. Amit, put your whole portfolio in meme coin or pronounce Massachusetts in front of your first conversation with your crush. In terms of which one's actually going to go better, probably my portfolio in meme coins. Probably Fartcoin would do better than saying that stupid word, Massachusetts. I don't know why that word has to be. Why is that word is so Massachusetts? Like what type of word is Massachusetts? What does that even mean, bro? Massachusetts, like New York means new and York. What the heck is a Massachusetts? What is a Massachusetts? I'm putting that into ChatGPT. How do you even come up with that name, bro? Ridiculous name. Amit, are you bullish on industrials? Not really. I wouldn't say they're a horrible bet, especially if we get a little bit of a downturn as a hedge. But I personally am not exposed heavily to industrials right now. It was named after a native tribe. Okay, see, now I sound disrespectful. See, like, look, now someone's, if I run for president, someone's going to fucking clip this one day. and they're gonna say it's disrespectful. But still, dude, it's a hard name. It's a hard word to say, bro. It's a hard word to say. Oh my gosh. Oh my gosh. That makes sense though. Is that why Elizabeth Warren keeps saying she's Native? Is that the reason? Is that how we get there? Okay, let's get some update on quantum computing stocks that did amazing today. Let's hear if we think there's some juice in these quantum names.
To Doug Clinton with our apologies, founder and CEO of Intelligent Alpha. I guess it just begs the question, how do we add in the promise of quantum computing and layer it on to AI, and what does it mean for the tech group and even the tech leaders, the Mag 6, I guess, if we don't use Tesla, although that's a tech stock too.
I don't think it means a ton right now, Joe. The way that we're playing it, at least at Intelligent Alpha, also at Deepwater, where we focus a lot at AI on AI companies, is I think this is the AI moment. So for the next 2 to 4 years, all of these companies are going to be driven by what they do in the AI space and how they actually generate revenue from AI. Quantum, I think, is fun optionality, but we're just not going to see anything tangible from it in the next 2 to 4 years. And so so
he says 2 to 4 years. Jensen says 20 years. I don't know who exactly is going to be right on this, especially with NVIDIA hosting the quantum conference.
Good story, but I think you really need to rely on AI products and revenues if you're making investments in the tech space right now.
And so, just to summarize maybe how you're feeling, or to encapsulate how you're feeling, that the tech trade, while some people think is dead, if you assume multiples hold up at 28, these are still fast-growing companies. So you theoretically could just add the earnings growth and layer that onto the stock price, and that would be probably 18 to 20% growth this year in the MAGA 7.
That's right. And that's a conversation we've been having more. You think about, there's an old saying about markets where...
Bro, did he just say the MAGA 7? I've never heard that phrase yet. I've never heard the MAGA 7. I haven't heard that one yet.
Markets are meant to frustrate the most participants possible by doing what no one expects. I think the consensus... Yep. Exactly, yeah. And I think the consensus coming into 2025 was, this is the year of a broadening. This is the year where big tech slows down. And we're sort of asking, well, what if it's not? You go back to 23, expectations were for a recession. 24, expectations were for small caps to win. What if in 25, we do get what you just described, which is multiples hold steady for the Mag 6. You layer on the earnings growth, and you do have stocks that are growing high teens probably. And that's a pretty high bar for the rest of the market to keep up with.
Yeah, and there'll be some FOMO. I can feel it already. You think of the...
I think this quantum thing has gotten very interesting, and no one can definitively say they are years away, and no one can say they are, going to show results tomorrow. I think these are going to be some of the most volatile names in the sector. In fact, let's end the show today with looking at some short floats. So the short floats just got updated, I think, a couple of days ago. So if you have some tickers, let's take a look at a lot of these short floats. You can put it in the chat, and let's see how short the market is on some of these core holdings and big names. Yes, let's do this, and then we'll get out of here. After this, I have to go to the gym because I missed the gym yesterday. Because although I still ate healthy, but Jason and I went for like 4 hours, bro, and I could not go to the gym at 8 o'clock. So after this, I'll go to the gym. XRP is up. Yeah, XRP at $3. Steve's got to be ecstatic about that. Wow, it's at $3.50, bro. Holy crap. XRP is doing its thing. It's not a nail appointment. Although I did cut my nails today because they were getting too big. Dude, I'm so bad at cutting my nails, dude. They're so uneven and shit. This is why I need a real man. Like, they're all uneven and stuff, but at least they're not as long as they were before. It's time for another manicure pedicure, bro. It's time to do this. All right, so yeah, Jason and I went. Oh, okay, Bay Ray, I see what you're saying. We streamed for 4 hours. Goodness gracious. Goodness gracious. All right, here we go. Let's see. Let's start off with Palantir. Palantir short float update. We are at up 27%. Wow. So now the short float is 5%. A couple of weeks ago, it was at, I think, well, it was 27% lower, obviously, but a couple months ago, it was like 1%. So that's up a lot. So looks like at that 84 range, 75 range, market got excited to short Palantir. Okay, so that's what we got on Palantir. Let's check SoFi. I think SoFi shorts came down. Yeah, look at that, down 5%. SoFi shorts were 188 million when this thing was $7. Now it's down to 129 million. Still a pretty aggressive amount, but it is down 5%, which is nice to see. Okay, let's do the quantum names. Rigetti. This is as of December 31st, so about 2 weeks ago. 20% sold short, 23% up from December 15th. Now, technically, these shorts have done, like, are profitable because they have to be shorting around that 17, 18 range. So they're doing okay for now. But if you started shorting a couple days ago, you are getting squeezed. It is not working that well. Did you say you screamed for 4 hours? I hate you guys, bro. I really, like, you guys are different, bro. You guys are different. Let's try Tesla. Tessie is down, wow, 16%. Holy crap. This was when Tesla was just breaking out to 400, December 31st. So we're going to get a new update probably in like 2 days on the short float. But Tesla shorts down 16%, which is nice. Let's do QUBT, quantum computing. Short float is a whopping 16%, was up 23% from last time. So still a decent amount, especially because they don't have too many shares outstanding. HIMS, let's take a look at HIMS. HIMS is 30%. Why is 30% of HIMS sold short? That is aggressive, bro. Like, HIMS is supposed to be a good company, and that's up 20%. That is very aggressive. Feels like for no reason. All right, so HIMS is shorted. Let's check CleanSpark. CleanSpark, 26%. These are hedge funds that are going long. MSTR shorting CleanSpark, so that makes sense. HOOD, yeah, I think HOOD actually, I checked it the other day. I think HOOD went down, which I mean, makes sense. HOOD, oh no, it went up a little bit, but it's down from where it was a couple months ago. So it's at 2.4%. It is up 1% from December 15th, which is not too crazy. Let's check Grab. Grab is at 4%, which not bad. Relatively small amount out of the 4 billion shares, but it is up 12% from the previous one. Nubank is 4%. Again, nothing. That's actually down 5%. So that's not too bad. Nubank's a very quality company. Again, I think it's currency exchanges, but makes sense that that's down. MSTR, let's check them. So we don't have the percentage of float, but we did see it decreased from 1215 to 1231, which is good. I think there's other websites that have the percentage of MSTR, but it is down 2.8%. Archer, let's check Archer. We are at 28%. Well, those shorts have not been doing well. I mean, Archer has done pretty damn good over the past couple months. SMCI, let's check SMCI, but the short float is down 2%. SMCI, 78.9 million, 15%. I thought SMCI would have a higher short float, to be honest. 15% isn't that crazy. It's not that crazy. Marathon, which I'm about to go run at the gym. Marathon, 25%, 6.89% up. That's pretty aggressive on Marathon. Again, it's a long MSTR, short Marathon for a lot of the hedgies that are gamma squeezing it. AMD, wow, AMD is only 3%. I mean, it's up 15%, but AMD is not being manipulated down. That's for sure. Let's check NVIDIA, dude. NVIDIA's got to be like 1% max. There's no way people are shorting NVIDIA. 1.2%, yeah. Dude, you have to have some balls to be shorting NVIDIA, bro. NVIDIA? I feel like NVIDIA is not easy to sleep well at night, shorting that one. Coinbase, 4%. That's nothing too crazy there. Let's check Google. Google, probably 1% or less. Yeah, 0.82%. No one's really shorting the Mag 7. Celsius, let's check Celsius. Celsius is at 17%, so that is a decent amount. TMDX, let's look at TMDX. TMDX is 28%, probably even more over the past couple months, but it's up 5%. That is a decent amount, almost 30%. Serve Robotics, let's take a look at that. 13%. Wow, that's up 52%. Jason and I were talking about that yesterday. Serve Robotics. That's up 52%, 13% short. And then let's do IONQ. That is 13%. That's down 20%, which is not too bad. Not too bad. SoFi did not get a $35 price target. SoFi got a $26 price target with a bull case of 35, but it's not really a price target. It was just William Blair saying, hey, because they're not allowed to do price targets for some reason. I don't know why. But they said, this is what we're thinking of the stock, even though it wasn't an official, like, hey, we think it's going to 35.26. But they do think in a bull scenario, SoFi is probably closer to $35. That's what they're thinking. Okay, let's do a couple more, and then I will get out of here. Let's do SoundHound, which I think was up 9% today. SoundHound is 25% short, up 5%. That's a decent amount. Rocket Lab is 15%. I feel like it's normal. That's not too crazy. Up 5%, 15%, nothing too crazy for Rocket Lab. Neo, let's check Neo, and then we'll do Nike. Neo's 7%, down 2%, which is okay. I feel like that's pretty healthy. Nike is 2.4%. No one should be shorting Nike. I feel like these are not companies that get shorted like that, even if they don't get bought up. But that is up 17%. So you did have 17% more interest in that short, even if the float is only 2% short. All right, guys, that's it. I got to get out of here. If you guys want to check this yourselves, just go to the Wall Street Journal. Like, I just literally go to WSJ.com and just type it in. You don't have to have an account. You don't have to have I have a membership, but I don't think you need to have a membership. So if you just go to the account and type in a ticker, you should be able to get the answer. And it's a good resource for checking the short float. All right, folks, that is it for me. I'm going to head to the gym and continue to embrace the new year, new me. Overall, great day, incredible day. It's one of those days where, you're happy, you're invested. It's an exciting day. This was a big week with banks, CPI, etc. I would not be surprised if we give some of this back tomorrow and Friday. But I do think that the momentum and the logic behind the bull case is very strong. And it's hard to imagine that it disappears, outstanding any, crazy data that we get to go the wrong way, especially as we get into tech earnings coming up very soon. One thing I will say, I said this in the morning, but I want to repeat this. January 17th, which is 2 days away, Friday, is going to be a very volatile day because lots of options are expiring. Why? Because in 2023, one of the only options available to buy in terms of a leap was January 17th, 2025. Just like January 16th, 2026 is going to be volatile a year from now, because a lot of people bought leaps 2.5 years ago for that day, including myself with Robinhood. The 17th, which is 2 days from now, is going to be volatile. So I do think there's going to be tons of options getting exercised, expiring, being hedged against. People are going to be selling them. So there's a ton of volatility we should expect. But in general, all the data we needed has been received over the past couple of days, especially with CPI, banks with good earnings. And if we can hold this momentum, then hopefully the rest of the week also ends green. Today's leg day. 2 days ago, I did arms. Today are legs. And then doing cardio as usual. All right. That's it. Thank you, everybody. I appreciate you guys every single day spending some time with me. It means the world. I do not take it for granted every single morning. I know the streams are growing and a lot of people are coming into the show, and they are, I'm getting a lot of messages on Twitter of people really enjoying the content, enjoying the show. So I enjoy doing it every day. I couldn't imagine doing anything else. It is the most exciting thing to do every single day, waking up in the morning and getting ready to talk at this point for basically 8 hours a day and analyze the excitement and the craziness of the equity markets. It's the coolest thing in the world. It is the coolest thing in the world. And I still get butterflies every time before I go live. That's how you know I still have a crush on the stream. The day I stop getting butterflies before I go live is the day I know that I don't like doing this anymore, right? And I think that day is far away. I really enjoy doing this. It's so funny, bro, because my friends like don't understand it. Like a couple of my friends from college, which I'm relatively close with, they were like, "Hey, do we want to, do dinner in New York in a couple weeks?" And I was like, "What time?" They're like 5:30. I'm like, and I don't even know how to tell them, guys, I'm streaming. I can't make 5:30. Like, that's like, we're probably gonna have earnings on a day like that. Like, we can't, especially over the next couple. Like, there's no way I can make that dinner. So like, all 4 of them are down, and then I'm the one who hasn't responded yet because I'm like, 5:30, bro. Are you out of your mind, bro? 5:30, like 5:30 is like stock market time. We're still talking markets, so it's just one of those jobs that you definitely sacrifice for, but I enjoy doing it every single day. Dude, I am early. It's StreamYard's fault. It's not me. That is StreamYard. Also, I know you guys want to actually get me to ring the bell every morning. I can't do it. I physically can't do it because StreamYard mutes the audio with their filtering. So as much as I want to like actually ring the bell, unless you guys want me to ring the bell, but play the bell sound, and then I'm basically ringing a bell you can't hear because you're hearing a pre-programmed sound, but you're seeing me ring the bell physically. If you guys want me to do that, let me know. But the actual sound of this thing ringing, I can't believe I just said belling. Oh my God. I can't believe I said this thing ringing. You're not going to hear it because of freaking StreamYard's stupid filter that they started doing. All right. You guys want me to test it right now? Look, it's not going to work. Ready? 3, 2, 1. Did you hear that? There's no way you heard that. Let me check right now. No, it did not work. It did not work, bro. It did not work. Hold on. There's no way that worked. Hold on. They sort of. Holy shit. Hold on. I can't believe this. Look, it's not going to work. Ready? 3, 2, 1. Did the green market fix the bell? Dude, it worked. It worked perfectly. And it sounds way better than this. It sounds way better than that. Like, holy crap. Hold on, let me try it again. Let's do it again. Let's do it again. Maybe that was lucky. Let me do it again. All right, ready? 3, 2, 1. Dude, I think the green market fucking fixed this thing. This is insane. 3, 2, 1. Oh my God. I spent 10 hours trying to make this soundboard work on Saturday, literally only because this thing wasn't working. Maybe not 10 hours, 7 hours, but still, it was a lot of time, bro. And it was really frustrating. And I was going to like these Reddit forums from freaking 2003 to try to figure out how the fuck to set up a soundboard. I guess it's good because it inspired the soundboard and now we have more sounds, but okay, so I guess we're back. I guess we're really back, bro. This is actually really cool, dude. I kind of like this is. You guys remember on the market open for the past month, I've been playing that stupid YouTube short to try to like get the sound because it wasn't working. If this doesn't work tomorrow morning, I'm going to be so pissed. If this does not work at 9:30 tomorrow, is it like exclusively for the market close or something? Like this is. All right, I guess we're back. It's the sign that the market's back, bro. The bull market's back, I guess. We're like, dude, it didn't work every time I rang it. Go look at the past 15 market opens. It gets muted. And then all of you guys are like, we missed the bell. And I'm like, all right, so I gotta find a way to make the sound somehow. And that's what inspired the soundboard. That is pretty wild, bro. That is pretty wild. Maybe StreamYard fixed it. Did I mess with the settings or something? Maybe I messed with the settings or something and I fixed it. That is crazy, bro. And there wasn't even an echo or anything. It was just like, it was a good bell. It was a good bell. Just because of this, all my money's going back into the market. Dude, I mean, if this is a sign, your mom is punching the air right now. We are so back, baby. We are so back. All right, guys, I'm out. Thank you, everybody, for being here. Love you all. Appreciate you. Thank you for showing up every single day and being part of this community. It means the world to me. And hopefully we keep growing the community and keep going every single day. And we keep doing it. It's an amazing job. I enjoy doing it every day. I get butterflies every day. And so I only get to do this because you guys show up and you guys enjoy the content. And we've got a lot of stuff to cover over the next month with tech earnings. So we got a lot to get into for Q4 2024. All right. Thank you, everybody. Great day. Green day. I'll see you guys tomorrow on the Market Open. Bye, everyone. Have a good one.